Hello and welcome to the day ahead. It is Friday, May 27th. I'm Andrew Gagan. We're getting to the global markets overnight, a very different investor mood with stocks surging on the back of upbeat retail earnings and easing concerns about an overly aggressive US Federal Reserve, prompting buyers to swoop in. All three of the majors higher, with the economically sensitive consumer discretionary and microchip stocks outperforming the broader market, licking their wounds from recent sell-offs. Markets are on track to snap the longest losing streak in decades and post the biggest weekly gain since mid-March, with the S&P managing to remain out of bear market territory. Stock specific, it was all about the retailers. Macy's jumping after it raised full-year profit forecasts. Dollar Tree followed suit, suggesting consumers are shopping for less costly goods amid soaring inflation. And that comes after dire warnings from the likes of Walmart and Target set the broader retail sector tumbling just last week. Elsewhere, Twitter shares spiking on news it's suing Tesla chief executive Elon Musk for delayed disclosure of his stake in the company. And US listed shares of Alibaba Group rising after first quarter earnings top forecast despite reporting its slowest ever revenue growth and providing no forward guidance in view of COVID restrictions in China. Getting to the data docket overnight, the US economy shrinking at a revised 1.5% annual pace for the March quarter, more than the 1.3% contraction forecast, despite a rise in consumer and business spending. A closer look, personal consumption, a beat on the street, up 3%, with business investments soaring more than 9% in the period. And the number of Americans filing for unemployment benefits fell more than expected last week as the labour market remains tight, with a record 11.5 million job openings at the end of March. However, company guidance increasingly is pointing to a slowdown in hiring as the economy cools. Pending home sales dropped 3.9% in April, which was much steeper than expected, taking them to the lowest level since, in 2 years, as rising interest rates are seen to make housing more unaffordable. And the Kansas City Fed Manufacturing Index easing slightly this month, but was firmer than forecast. The US dollar edging lower as markets considered if the Fed Reserve may pause its tightening cycle in the second half of the year. As a result, the Aussie dollar firmed, along with most other major currencies. And concerns about slowing economic growth in the US saw shorter-dated Treasury yields fall. US 10-year yields were steady, close to 2.74%, but the US 2-year yield dipping around 2 points to 2.48%. And most cryptocurrencies traded lower overnight, decoupling from rising equity prices. Bitcoin continuing to struggle to break above $30,000 and is down 2% over the past week. Well, the rally on Wall Street is expected to flow through to the local session today, with ASX futures currently up close to 1%. Global oil prices surged overnight after data revealed that US gasoline stockpiles fell to the lowest level since 2014. Critically, this comes ahead of the summer driving season in North America. Brent crude rising 3% to $117 a barrel. Iron ore futures falling marginally, with Chinese steel mills having cut output. And base metal prices were mixed, nickel continuing its rebound, up more than 1.5%. And the gold futures price up slightly to $1,847 an ounce. Well, on the corporate calendar, CSR is trading ex-dividend today, and Aussie software company Appen remains in focus, with Canadian data analytics software maker TELUS suddenly withdrawing its $1.2 billion indicative takeover offer with no reasons given. Appen shares were put in a trading halt yesterday after surging more than 29%. And on the data docket, Australian retail sales data is released later this morning, which is expected to show sustained momentum in April, although weakening sentiment and rising prices add downside risk. And that is your day ahead. See you again Monday.